For the last several months, I have shared the crypto assets that I like, those that I feel are your meat and potatoes or your rice and beans crypto assets that have good data to support why they should be on anyone's watch list. And I also made predictions based on historical patterns. The last 3 months of any bull cycle are usually really strong. And that was what I thought would happen this year. But after the October that we had, I am downgrading my forecast. I feel that whatever gains we are going to experience in November and December, they are going to be quite muted. So what happened in October? The market was doing really well. Bitcoin was over 120, ETH was over 45, BNB was inching closer to 260, and then a post was made. And this post had to do with tariffs. What happened after that was that momentum was sucked right out of the crypto market. Now, there is a part of the crypto market, the perpetual futures market or the perps market, where people make bets regarding the price of assets. They make bets that the price of an asset is going to go up, and they can also make bets that the price of an asset is going to go down. They can borrow up to 100 times what they have, and this can magnify their gains, but it can also magnify their losses. Now, because we were doing so well, and of course, because historical patterns have revealed that Q4 is a very strong month for crypto, there were several people who believed that many assets were going to go up in price. Unfortunately, when that post was made, these people lost almost everything. And there were also other market participants who lost everything. They were wiped out. So the chaos in the perps market dampened investor confidence. So the question is, what next? So I'm going to share some of my thoughts. I used to play tennis when I was much younger, but whenever I stepped onto the court, and I had a lot of thoughts in my head, or if I was down a set and I was struggling, I would get really tight. And so most of my balls will just hit the net, or they will try to hit the fence. And so I feel a lot of traders are tight in a way. They are quite uncertain, not about the crypto market itself, but about the macro conditions that we find ourselves in. So I was curious, okay, are people spending less? Are people deploying less capital into the crypto market? Because that could kind of explain why we had a drop in momentum. And so I looked at the major economies, the US, Japan, China, and the Eurozone. Now, in the United States, the saving rate in 2025 has been lower than it has been previously. Also, although spending has remained strong in some areas, people are spending their money on essentials, not non-essentials. So if you have to buy BNB at $964, or make sure you have food on the table, you're going to make sure you have food on the table. Now, in the Eurozone and in China, the savings rate is really high, and I think has historically been quite high. But it's a precautionary measure, and spending has been moderate. It hasn't been high, but people are not spending on non-essential. And in Japan, it's been in between. So this data seems to suggest that people are spending their money on what is essential. As a result, I think they aren't deploying as much money as they would have in the crypto market, but in other markets as well. But what does the crypto data actually reveal? And so I used indirect metrics, retail deposits on exchanges, because most retail traders use exchanges. They're convenient for them. And also people who are new to crypto would rather use exchanges than centralized exchanges than decentralized exchanges. The data has been mostly mixed. There have been periods of time when the retail deposits have been high, but there have been periods of time when they've been neutral to negative. And that has been for most of the time. I didn't look at institutional investors. While institutional interest in the space has increased and will continue to do so, most participants are people like you and me, retail. Yes, there was a second federal rates cut in October, but there was also a signal that that might be the last federal rates cut of the year. Now, I think 2 cuts are better than 1, and 1 is better than 0, but 2 cuts do not seem to be sufficient for the crypto market. So my conclusion is this: money is entering the crypto market, not because the fundamentals are weak, but because the macro conditions are weak. Now, when this money enters crypto, I think that it's going to go towards more established crypto projects, those that are quite strong, as opposed to crypto projects that are looking for problems to solve, or very, very high risk crypto projects. But I should also mention that because this market is so reactive, today it could be doom and gloom, and then tomorrow it could be bright and vibrant. So that could still happen. I don't think we're going to zero, far from that, but I think the performance will be muted. But in the meantime, I'll keep sharing my thoughts on the market, and I'll keep sharing the assets that I really like. This is all that I have for you today. Thank you so much for watching. I'll catch you in the next one.